Morning, everyone, and thank you for joining Wiser Technologies earnings call for Q4 and the full year of 2025. Before we begin, a quick note that today's call is live streamed on Wiser's YouTube channel. The meeting is also recorded, and a replay will be made available afterwards. Our presenters today are Ivaylo Slavov, Chief Executive Officer of Wiser, Martin Milanov, Chief Financial Officer.
Good morning, everyone.
Joining us as well is Kosta Jordanov, co-founder and board member of Wiser.
Morning.
My name is Georgi Lazarov. I'm VP Communications at Wiser, and I will be moderating today's call. Just a short overview of the agenda for today. We'll go through a short overview of the market environment and the business context. Then we'll have a recap of the key developments and performance in 2025, a detailed presentation of the financial results, and then we'll discuss the operational improvements we are implementing. Finally, we'll have an outlook and guidance for 2026. We will then conclude with the call with the Q&A session, during which you will have the opportunity to ask your questions. And without further ado, I will hand over to Ivaylo. Ivaylo, the floor is yours.
Where we like to start from this call today. First of all, we would like to see what is the key elements which are surrounding us to make business, and also the IT services market trends. And we like to elaborate a little bit about what the market, customers, companies, and workforce developments are currently ongoing, which affect our business in different ways. Some of them positive, some of them not that positive. Third, unknown. Starting with the unknown, the first thing is to talk about the markets. We do have heavy developments in the last 18 months on the markets. Means numerous wars were started, numerous conflicts was opened. All the taxes, all the fees, all the things, all the tolls, everything what was raised by the US government is affecting the business big time. The dollar was developing heavily down in the last years compared to the pound and the euro. There were many things on the geopolitical side which are making the markets uncertain. And what we do for sure is we are looking very carefully on these developments and trying to understand how to position Wiser in order to participate in the right way on these trends. What I'm meaning by saying this, I mean, for example, we have recent developments in Europe which are strengthening the European position and the European ideas, and also the European efforts in the global competition and the global market. And we try to force solutions, vertical solutions, AI-based vertical solutions into European markets to follow the trends and to follow the strategics, this European tool, speeds, and all the other things which are ongoing. I mean, talking about the markets, the common denominator of all things said is the markets are uncertain at the moment. And in uncertain markets, the ones which are more flexible, faster, cleverer, more clever, these are the ones which are usually the winners. And we try to be among the winners. Means we have to lead strategic talks, we have to put solutions into place, and so on and so forth. Talking about our customers. As you know, we do have business split in various geographies. Marty will outline this in his speech afterwards, how our business split is, how this looks like. However, what I can say here is that all our customers have something in common. There are almost no new projects without AI. Means all the new investments in the customers are reflecting the AI trends. And this means all the new demands in the enterprises, which are predominantly our customers, because our customer base is predominantly coming out of the enterprise, upper mid-market, and some big scale-ups. They are looking for solutions which are including the AI component. And not AI for the sake of AI, but AI for improving their businesses, AI for getting more efficiency, AI for becoming faster and getting new competitive advantages. And we developed a numerous solutions which are as well vertical as horizontal, which has strong AI background and strong AI components, combining our business solution knowledge, our application knowledge with the trends and everything related to AI. This is about the customers, means what we are expecting and what we are seeing and what we are seeing on the RFPs. Either the infrastructure has some AI touch, either you're talking about AI in the business applications, or even more, and this is a one further trend where the customers are following in the last years, we're talking very much about sovereignty. Most of the solutions are talking about sovereign clouds. We are talking about building of environment which is secure, which protects data, which protects environments. And this trend is as well in Middle East, where we have a very strong market, as in Western Europe. And this one is something that we are following also very carefully. This is about the customers. Talking about our peers and talking about all the companies in our industry. We have, first of all, let's say if we talk about the median, then we have single low digit growth rates on average in the customers in our business. This trend or this statistic or this analytics is following the trend that many of the investments in the last 2-3 years was kind of postponed in order to make all the pilots and all the proofs of concepts for AI, involving many efforts in the customer side to learn and also to be trained and to be qualified to understand what these trends are. And we are hoping in the second half of this year and in the years to come to have much bigger project spends, which will convert all the proof of concepts into real solutions and into real applications for our customers. But 25, it was a year of single low digit growth rates. There were some companies which was even below the levels of 24 and 23, and most of the companies came to this single low digit. However, we have something positive to say on our side. It was completely against the trend, and we had a not bad double-digit growth rate in terms of growth, thanks to all our, not surprisingly, AI efforts, because we won a couple of new projects, especially in Middle East, where we have made the biggest growth, which was dealing with working on heavy investments from the Emirates for their sovereign clouds and for their AI specific and AI solutions. And in all our other markets, we remain stable, and we had also similar, let's say, similar successes in the space. However, the biggest growth factor, 25 for us, was this work on these sovereign solutions for the Emirates. And last but not least, we have one more to say, and this is all about the workforce. What means that one? I mean, if you guys remember the years between 2014-15 to until COVID, until 2020, was markets which was predominantly, we call them candidate markets. Means there was a huge need of developers, huge need of everybody which is working in IT. Doesn't matter, it's program management, project management, all kinds of roles, and there was huge demand on that. Today, some things change, and what changed first was the COVID, because the COVID changed the way of work predominantly, bringing everything remote, which gave the opportunity to all the companies to hire everywhere. which is a fantastic benefit to every one of us who knows how to manage this. And we are a company which is hybrid and remote first, means that we were before COVID already prepared for this. And second, the profiles that we are looking for changed a lot. Means that today we are looking much more for AI engineers, and we are looking much more for, let's say, people with higher seniority and higher maturity. And this brings us for sure to new challenges, how to develop our workforce and how to develop our headcount in the coming years. On top of it, we have in most of our developed markets the demographic trend where the population is getting older, means that we have to find ways how to migrate experts from different places to our organization in order to be able to deliver globally. And what we are thinking are scenarios which includes opening new offices abroad, opening offices in the same time zones like the Asian markets, in time zones like the US markets, and in order to follow all the trends and to find the right workforce and the right expertise and the right skills from people which we need to perform our strategies. Talking about this, I would say I hope that I was able to give you an overview about the market developments, about what our customers are doing in terms of investments. Maybe one more thing to be said here is that talking about our customer expectations, we have one additional trend, because if you think about design, build, and operate in our businesses, the additional trend is more things are going to a managed service type of mode, which is changing dramatically the way how we're operating systems. What means that one? When you put AI into your work, then you're becoming more efficient. This means that one and the same person can do much more than before and can serve much more potential tasks than it was before, because AI is doing a big part of the job. And this means that all the trend of operating system and maintaining systems is going to manage service and to shared service, in order that smaller number of people are serving and operating higher number of applications, higher number of systems, higher number of security, and so on and so forth. This is maybe one more trend which I forgot to mention, talking about our customers and the spendings. And we are looking very carefully to invest by ourselves to have the right strategy how to address these needs of the customers. And last but not least, as I said, we are growing faster than the market, which made us proud. We plan to grow faster than the market as well, and looking for strategies for that. And talking about workforce, AI engineers forever, new roles, new definitions. Now we are talking, thinking, working, learning every day how to deal with that circumstances. And now I'd like to switch to Kosta.
Hi, everyone. I will continue with a high-level overview of our performance in 2025 and some of the key events of 2025 before Martin digs deeper into the numbers. In a nutshell, and this is something that Ivo already mentioned, we continue to grow the business rapidly in 2025 from 20.5 million in 24 to 39.2 million in terms of revenue for 25. Which is almost doubling the business. A big chunk of that is driven by the acquisitions that we completed mid-24, but we also delivered consistent organic growth of 18% for the year, which is not only significantly above industry averages, it's also coming in a year of complex integration of 7 companies into one. It's from that perspective, we think we delivered well on the organic growth part for last year. Moving forward to the financial results, we delivered slightly positive EBITDA, very modest, slightly positive EBITDA from operations and margin expansion is one of our key priorities for 26. And actually, this shift in focus, as we discussed on the previous earnings call, is a big part of the reason for the leadership transition that we did earlier this year in order to prepare for this next phase of the evolution of Wiser. Here, it's worth noting that these results comes also against a very heavy currency headwind. And you see more from Martin, but a significant chunk of our revenues comes from in US dollars, and the 13% depreciation between January and December had way over €1 million negative impact on the numbers. Two important things to note, that we are also essentially call it house cleaning, to make sure that the company is on the best path to profitability moving forward. And it's also ready to take the next strategic opportunities. What we mean by that is there are two major adjustments that Martin will comment more on, but I will mention here to the results, to the operational EBITDA that you see here. Both of them are one-off. The first one is we are writing off a close to 1.7 million overdue receivables from clients. All of those are predating 2025. The vast majority of those are actually predating the acquisitions, so they were inherited with one of the acquisitions. We have not given up on collecting the money, and we have not exhausted all of the opportunities. Actually, haven't even started the legal action yet. So chances are we'll collect some of this money, but we wanted to make sure we start 26 on a kind of clean slate, and everything that is kind of old and dubious is completely written off. The second big adjustment, that's acceleration of commissions. What this means is the sales commissions that we're paying to partners, the big chunk of them are conditional. And we change the accounting policy and start to recognize them at the time of the revenue, regardless if the condition is met or not. The impact in 25 is 1 million. There's a significant overlap because there's also under the new accounting policy, a lot of commissions should have been allocated to 24. Most likely with the audited results, we will adjust for that and the impact will be lower. And again, Marty will comment more, and you will also see the kind of the Q4 numbers on a standalone basis, how they compare with the previous years and the previous quarters. Moving forward, away for a second from the pure numbers, there are several big things that happened in 25 in Wiser. The first one was the post M&A integration. So 23 and 24, especially 24, we were very active on the M&A front, and we did seven transactions. So 25 for us was the year to establish Wiser as a unified brand, a year to establish a unified team structure, so one organizational structure instead of 7. It was a year also to start establishing unified processes. And we're probably 80% there. They're not, I would not say they're effective. They're not efficient yet, but they're unified to a big extent. And a big chunk of the goal for this year is to finalize it to 100% unified and to start optimizing the processes. So we have kind of a first draft version of a unified processes that we continue to develop and continue to optimize moving forward. And in the last part of the conversation, we'll talk about some of the plant optimizations and some of the things that already happened from the beginning of the year till now. And we also simplified significantly the legal structure. So we started merging the companies gradually. We still have some work to do this year, but it's already, and I think we shared this at the previous earnings call, it's already significantly more streamlined structure and a Wiser branded. And the last note for 25 is just wanted to highlight a few major investments that we did in 25 in order to properly prepare for the future growth of the company. The first one is much in line with what Ivo spoke about. This is having a solution delivery platform that allows us to quickly and efficiently roll out AI solutions to our clients, including having a few vertical solutions like a procurement navigator, which is managing the procurement processes for enterprises, board navigator, which is supporting boards in their decision-making process. All of those investments, by the way, were all expensed, so none of this was capitalized, and this is fully reflected in the numbers that you see. We also invested heavily in the development of the infrastructure to support the new size of Wiser and to support the growth ambitions of Wiser. This includes rolling out HR management system, SAP SuccessFactors, which we did in Q4. This includes rolling out Microsoft Dynamics as ERP, which was launched in January. Both of those very significant multi-month large projects. That, by the way, we kind of completed the first phase, but now there are more modules that we need to roll out this year. There are more to be done in terms of taking full advantage of what those systems offer in terms of the enterprise infrastructure of Wiser. We also opened subsidiaries, legal subsidiaries in 2 of our key markets, UAE and Germany. We did a lot of investments with respect to retraining the team and retooling the team for the new AI era. With that quick overview, I wanted to hand it over to Martin for a deeper dive into the Q4 numbers.
Thank you, Kosta. Okay, so as we look at our 2024 performance, we have successfully closed our major acquisition phase. And while 2025 has been really a year of focus on integration, we still haven't slowed down. In fact, we achieved 20% of organic growth, as you can see on the slide. And just to put that in perspective, as Ivo said earlier, the industry standard is currently stuck in the single digit. So this proves that our core business isn't just stable, it's just significantly outperforming the market. So let's move on to how we are navigating the currency headwinds. We've seen massive expansion in the Middle East, which has naturally boosted our revenue in US dollars. Now, it's no secret that the dollar depreciated by about 12% against the euro in 2025. And despite this, we still grew our USD revenue to the equivalent of 14 million euros. So, and let's pause for a while here and say that, like, if we look at the opportunity loss due to the currency movements, we are talking about probably €500,000 that would have gone straight to our operational margin had the currency was more stable. However, the fact that we grew through such a strong headwind is the ultimate justification that our operations are on the right track. This leads us to our bottom line. And even though we are still in the final stages of integration, as was mentioned before, the results are already visible in the EBITDA development. The heavy lifting of the merger is paying off, and we are now sitting on a very, very strong foundation to drive even higher margins as we move on to 2026. So this is the next slide demonstrates our P&L, and I want to get your attention on the 2 line items, external services and others. This is where the one-time adjustments are reflected, the write-offs and the accelerated commissions. And last but not least, we are finally, our balance sheet remains very resilient. Our accounts receivables are healthy and provide us with a steady working capital. And I want to highlight that we rigorously vetted these figures. We have confidence in the collection process, and even after the write-off of 1.68 million euro, our total receivables increased. And in our perspective, this is a clear indicator of the sheer scale of the new businesses that we are bringing in. And over to you, Ivo.
Okay, in the matter of the time we have, because Joro is giving me a sign that we are kind of have to leave some time for questions. I will not go point by point to explain how we are going to improve and optimize our business, but I like to just to send you guys will get this information afterwards, I hope, and you can read it, and this is then we will publish this. However, the 4 areas we are working together with Torsten, who is my partner in the CEO job, is we are talking in general about achieving profitable growth in 26. This means that we have to optimize our margins. We have to improve further our utilization, because when we are talking about improved utilization, I would say that the utilization was already improved in 25 compared to 24. And now we have to find the measures how to improve it further. Kosta was explaining about the processes. In our understanding of solid fundament, stepping on a process and people framework are keys to the success of any successful organization, and we like to be amongst the best. Therefore, we have to put our efforts to make this process and people framework robust. Maybe good news for all of us is that we have many, many years of experience of doing so in our previous lives, in our current activities, and so on and so forth. This means this will be one of the significant efforts we have, together with Torsten, together with Martin, together with the leadership team, to work on that topics and to make the 80% at least 95 in 26 compared to 25. The 80% outlined by Kosta before that, following the integration and following the, let's say, support the finalization of integration. And last but not least, maybe talking about the delivery efficiency, there are 2 things to be marked here as important. First of all, the way of delivering projects is changing significantly in the course of the last 5 years. AI is driving us to go to more solutions, to more fixed price projects, and to more different types of delivery models, which are very much value-based compared to the workforce or people-based T&M models from the past. This means that this will be one of the interesting challenges for all the companies in the next years to, let's say, to restructure, to rebuild, to operationalize the way how those type of projects will be delivered. And I think with the investment navigator, from the procurement navigator, with all the AI-based project we delivered in 25, already successful, in which in production we proved exactly this. Now we have to scale this. And we have to scale this in an efficient way. And this is the last of the 4 targets that we have in terms of improvements and optimization of the work. That's a short. You can, if you have questions afterwards, don't hesitate. We can go in detail on every one of these points. And I think my last slide for today is something which is maybe the most interesting for you guys. And this is where we are heading to in 26 and what we put us as ambitions. First of all, the first ambition is to keep the growth. Means double-digit on organic level is the minimum target. Why I'm saying this? I am saying this because we like also to explore, and we're doing this, many potential M&A opportunities, which will for sure increase the growth. However, as you all know, if the company is not growing organically, then it's heavy to grow only unorganically. What we like to do in 26 is to stay on the path of the double-digit growth. This is our ambition. The second ambition we have is to pursue selective acquisition of companies which fits into our strategy. I was explaining before that about the AI and the managed service, and exactly in these areas we like to see and we like to look after potential targets. Kosta is among us 3, Torsten, Kosta, and myself, the one who is following very carefully all the M&A targets, all the M&A activities, and I think within the next calls we can explain for sure how far we are with not with these efforts, because luckily for us we do have some identified where we are having interesting discussions. There is nothing to say right now, but in 3 months from now, maybe we have a completely different thing to talk about. Kosta, I think this is still the case, and we have to think and see how to talk about. However, what's important to be said is all this further acquisitions will be very much binding to our strategy in terms of markets, in terms of portfolio, and in terms of potential clients. Means that we like to bind our strategy and to strengthen the strategy execution with those acquisitions. And then talking further, the third thing is for sure we discuss about this operational excellence, but let's talk about profitability. We like to grow profitable next year, and we're putting all the efforts on the efficiency side to make it so. Last but not least, we started in UAE and Germany. We do have a daughter company in US, and we like to grow further. And we're exploring all the opportunities for global expansion. And I think there are two angles there as well, and this will be my final sentence. We are talking one hand side on international expansions, meaning new markets, and for sure the other hand side is how to finance this expansion and how to make this happen. We are looking also in international capital markets. The recent examples of Shelly and Sirma on the Frankfurt Stock Exchange are something which is on our mind and on our, let's say, outlook and path going forward. We have studied this. We are talking with different stock exchanges. We are talking with different providers of, let's say, international capital. And I think 27, 28, for sure, there are some news to come on this angle as well. But let's say like this, we're working now heavily on that to prepare the future. And that's all about my side for the outlook. Once again, 10% plus double-digit revenue growth, profitable growth, new markets, new capital markets, and strategic acquisitions.
Thank you, gentlemen, for your detailed presentations. Now it's the time for the Q&A session. So if you have any questions, please write them in the chat or just say them by raising your hand with the icon on the bottom of the screens. So far, we already have one question, and it's coming from Dubrin Tomov. The question is how you plan to finance any acquisitions given the current cash balance?
Kosta, do you like to take this or?
Sure. We are exploring a bond issuance that will be specifically used to finance further M&A.
Okay, this was very short and straight to the point. The next question is coming from Ioan Georgiev, who says, do you expect any capital raises in 2026, given the fact that your cash position has declined significantly? And he continues with another question. How would you go about improving your profitability and, most importantly, cash flow generations? That is, what are the measures that you are going to take? What are the measures?
I could take the first part, and maybe Ivo, you can take the second one. So on the capital increases, we are more looking towards debt financing moving forward. So that's why we're exploring bond issuance. We don't have a planned capital increase for this year. And on the second part, Ivo, over to you.
Can you repeat this question once again, just to be precise? The second part.
Yeah, the second part of the question is how would you go about improving your profitability and, most importantly, cash flow generation? What are the measures that you are going to take?
Okay, this is a talk for another call. I think, in order to answer this question in detail, but in short, first, utilization, second, rates, third, using AI in efficiency, and fourth, excellence in execution in all aspects of our business, means in getting our receivables back, having absolute discipline in financial management and operational management, and if some activities are needed where we see that we're burning cash in certain areas, we will take immediate action to remove them. And we have a plan and program for implementing a new products and operation system. We have a plan and program to implement further modules of the ERP system. We have plan and program to implement much better reporting, data analysis, everything AI enabled, to be able to see all the trends up. And last but not least, maybe the most important one, this is the process of forecasting and predictability of the business. We are undertook, I think, in the last months, Kosta, it's not something which is happening right now, but it's happening in the last, let's say, half a year, numerous activities to make our business cash and resource forecast much better, significantly better, as integrated company as it was for all the predecessing single companies. And this is a big key for success in company of this size and bigger, to know today what happens in 5 months and to be able to take actions today in order not to burn money in 5 months if you have the wrong skill, if you don't not sufficient business in one vertical, but we have much more in other vertical, and so on and so forth. Means all in all, efficiency and execution, better forecast, and absolutely taking care of the cash. Cash is king. This is something for us. However, as Kosta said, for the acquisitions, we are more looking at debt financing at the moment and less on capital increase for the year 26.
Thank you, Ivo. There is another question coming from Dubrin Tomov, and he says, on the bond issuance and M&A, a convertible bond.
Still exploring the exact setup, so we haven't finalized terms yet. The moment we have the terms, we'll share with all of you, of course.
Thank you, Kosta. Georgi Georgiev is asking, talking about currency risk, do you plan to take advantage of the higher dollar rate and or looking for to hedge long-term income in US dollars?
Martin, if you're allowed, I will answer this question. What we did is we, in the board and also in the leadership, we had a couple of sessions and we have to explore how we deal with the businesses on the global scale, which has different currency variations. It depends on the developments today, also related to this uncertain geopolitical stuff. And from my point of view, we will come with, I think, with actions and with measures which will strengthen the way how we're dealing with currency risk in the future. Coming from big enterprises by myself, for sure, there are different ways to solve these issues and these topics, like with putting some, let's say, targets and putting some hedging, some stuff, and so on and so forth. We are not there yet, but we are working on that very heavily. And I think Kosta and Marto are in this group of people working on this topic. And we will come up with not only ideas, but we welcome also ideas from your side, guys. If you have to propose us something, we can take over. We are currently in this, exactly in this phase, because it was also like this in 25. I would say not surprised, we was happy to get this growth in Middle East. And at the same time, we got a huge penalty for our growth out of the currency situation. And this is something that we will not allow the second time.
Thank you, Ivo. Jordan Konchev is asking, it seems that your AR days are about 100 days. Can you please explain what is the reason behind this? Is it due challenges with AR collection, or it is due to revenue recognition policies? If it is the latter, what is the proportion of the contract assets from the 11-month AR?
Marty?
Okay, so we can summarize basically the cause for that in one point, which is the expanding market that we have in the Middle East. So the clients, every new client that we have, that we manage to win, means that we have initial 4 months of 4 months of investment until we get the first payment, and we don't. There are two reasons for that. Probably one of them is just the way business is done there, but the second is that we are basically dealing with huge enterprises. So this is where we experience the gap between having recognized revenue from the POs to the actually getting the first paycheck in our bank account. So this is predominantly the reason for the increasing gap between the receivables in 2025. It's a good problem to have, to be honest. That means that we are winning new customers, and we are at least on my mandate. So we are trying to explore our options to opening factoring straight in the markets there through our subsidiaries that we just set up.
Maybe just to add that the payment terms for the vast majority of the new contracts, enterprise clients and the Middle East are like average is probably like net 90. So this is by contract, essentially 3 months. Net 90 payments.
Thank you, Martin, and thank you, Kosta, for the clarification. Ioan Georgiev says this might be a bit overextension, but are you planning any layoffs given the fact that your salary expenses more or less doubled this year, and you are also using AI to drive optimization in the organization?
We are not planning to make mass layoffs at all. We are planning to grow with the same number of people. We don't plan to increase the salary costs, and we plan to get more business with the same people. And let's say on natural way, part of the people working for the company will make or not make the transition to AI, and we will be following this process very carefully. However, no mass layouts are planned for 2026 so far.
Thank you, Ivo. We have a question from Georgi Raikov. We have discussed pricing strategy shift a while back in the context of AI productivity. How is the shift from FTE pricing? Just a second, because yes. Okay, how is the shift from FTE pricing to output-based pricing progressing so far? What is the current split, and could you share a target for output-based revenue?
The current split is something between 75 to 80 TNM to rest of offerings like fixed, output-based, and whatever. Our aim in the next 2 years is to make it 50-50. That's the aim. How this is moving, every new project where we have the full responsibility of is mainly driven by value-based sales and by fixed price conditions. What is not very popular in the entire world, maybe I can elaborate a little bit here, is the real output-based project management, because the customers are not willing to share efficiencies in many cases still. There's a joint understanding of this discipline to share efficiencies together. It started like 15 years ago. We started to work on this to make more output-based things. And I would say the number of those projects is growing, but not with the speeds as was expected. And this was not because the suppliers was not prepared for that, but mostly because the customers with their bad budgets and way of operations are not prepared to share efficiencies. That's the reality. I mean, and we are working on that path. Personally, I'm working on that path for 15 years heavily, not only with Advisor, but all existing companies. However, this level of trust with the customers for sharing efficiencies is something which is a challenge on the customer side even more than on the supplier side.
Thank you, Ivo. We have several questions from Velizar Furwansky. I will read them all at once. Which of the acquired companies bring these 1.6 euro receivables that are impaired now, and why they were not impaired earlier? What is the skin in the game of the current top managers in the company? I mean, Kosta is clear. How many shares does Mr. Slavov and Mr. Wegener and Mr. Milanov own at the moment? And the last question from Velizar is, how are the plans about India progressing?
I will answer this question, Kosta and Mark, if you allowed me. I mean, this impairment and these payments are coming from all business companies and not from one. Out of this, there is one big project came from the past where a scale-up didn't get financed for the next phase of development, and we was hoping this until March, April this year that will happen. This is why we have the significant amount. All the other projects are neglectable in size, from my point of view, compared to the revenue. And this one project was delivered before the platform Advisor was built, combining the companies. The problem was the next phase of this project, it was expected to be done in 24. I'm not talking about 2025, I'm talking about 2024. We was hoping to start them until March 25, and this didn't happen. Even we got many confirmations, even we got many information about that this will happen, and it will start. This is the reason why it was not impaired before that. Because there was no business reason to impair it before that. However, the origin of this one project it's about a project in Middle East with a US-based scale-up, which was selling quite a huge solution to MR Holding. Maybe the guys who knows MR Holding, this is the biggest real estate company in the Emirates. And end of the day, they didn't got finance to finalize the solution from the investors. What we did was we created all the solution. This is one of the project is like, Martin correct me, but something like 2/3 of everything was impaired. And
Even slightly more than that, yes.
even slightly more than that. All the rest is coming from all predecessing companies. We cleaned everything possible because we said when we go now from 40, hopefully to direction north 100 million, then we start clean, and this is integration is done. All the past is behind us. Everything is. We have a clean balance sheet, and we can clean hearts, and we have motivation and emotion to go further. This is the information. Maybe Kosta, if you'd like to add something to that.
Maybe just two notes. More than 95% of the whole amount is coming from one company and it's inherited, but it doesn't matter which one it is because Advisor is one company. The reason it was not written off earlier, actually at the time of the deal, a lot of other receivables were written off, not only in this company, but in some of the others as well. So we do try before the acquisitions to clean up the balance sheets of all of the companies. The big one in particular, the company had history with this client and had received, I think, about 5 million till that date from this client.
Yes.
So it was an operational project. There was history with the customer of paying. There was no reason for us to write off this amount. We have not exhausted all of the ways to pursue some at least partial payment. But we think at this point in time it's reasonable to write off the amount. So this is predating 25. In this particular, actually, most of those are even predating the acquisitions. With this particular client, we continue to work after the acquisition. So this particular client also accumulated additional receivables after the acquisition
And we got
until
some
we
payments
figured
in the
out that
beginning.
something's off. Yeah.
And we got some payments in the beginning. They just
Yes.
stopped from certain point of time because they didn't got finance for the next stage.
Okay. Thank you, gentlemen. I will remind you the second question. It's about how many shares does any one of you have currently in Wiser? Talking mainly about Ivaylo, Martin, and Torsten.
I will answer this very politely, but I can say from the very beginning we started, because Torsten and myself are from the very beginning of Wiser being board members. We had a very fair and good agreement with the current shareholders about all the conditions we have, and we are also invested and do have a material interest of the success of the company. That's what I can share. I don't know, Kosta, we can share more or not, but what I can say is we do have a very significant interest that the company is successful.
Only thing I could add is that both Ivaylo and Torsten have significant stock appreciation rights, which were voted at the General Assembly last year, which are significant in size and are related to performance. Martin joined us very, very recently, and we will comment on that at the next call.
Thank you, Kosta. I will combine these two questions as they refer to the future. One is the last question coming from Velizar. How are the plans about India progressing? And the other one is from Jordanov. Will there be a focus on the defense contracts in the next years, given the current situation in the world?
First of all, the developments in India are progressing well in the sense that we identified projects in the Middle East which we like to deliver from India, and we're in conversation how to exactly execute this, but we're not waiting for that. Numerous interview processes, numerous activities are ongoing to set up teams in India which are delivering on our Middle East projects. That's the answer of the first question. Means more to come in the year, because I would say we will not limit ourselves potentially to India, but we are thinking about further delivery locations, like, for example, Costa Rica for US, like Lebanon, Egypt, and India. The development, we will come to that early enough to, let's say, present news. However, India is the most developed of all those, and we do have a significant number of people which are in the recruitment process on particular projects in Middle East so far. Also, I think this describes the situation best. Yep. So, talking defense, we do have part of one of our verticals is called automotive, aerospace and defense. And the rationale of being aerospace and defense is exactly projects in that regard. Two of the four bigger predecessor companies, because I think eight in total, two of the four predecessor companies had strengths in defense and providing solutions to defense business. And today, our colleague from the board and one of the heads of one of the companies, Dimitrov, is also the head of defense committee to the German Chamber of Commerce. We are working heavily. Here is Mitko. We are working heavily on different projects, and maybe Mitko, you can share with us like 40 minutes what's the plan and what we're doing. Nice that you're here, because this will be helpful.
Yes, first of all, thank you for the question, and happy to be here. So, like we discussed in some of our previous earnings calls, we are very much active on the space and defense side. And I would like to connect them both, because for many nations, space equals defense. And in our mind, Bulgaria should not be, a big exception from that, because this very much holds true for Europe. So on the space side, last year, we managed to continue our cooperation with European Space Agency. We are from the very few companies working directly with ESA and delivering projects. What's more, we managed to become quite a good partner of DOR GFR. So this is the company from the German Space Agency, which is actually managing and operating the GNSS satellites of Europe. So, and you know the importance of that. We, with our AI colleagues, are helping them to do the operations and the management of the satellites in more efficient manner. We're very proud of that. We partner with Airbus on the space matters as well. And we engaged already in space projects for defense related to downstream. So basically Earth observation for what's happening on the ground for military purposes. That being said, let me transition to the defense. And there we are very much active in the European Defense Fund. So we are recognized as one of the good and top players. And we're in very active conversations with some of the top European and some of the US defense companies for direct contracts. We're very carefully observing the overall safe related efforts of our country. And we're in discussions how Wiser with our expertise actually can support also Bulgaria in the safe context. So if you look at it from positioning perspective, we're strengthening our position in space and defense, and we remain to be from the very few companies in the region which have all the necessary clearances, certifications, and experience when it comes to space and defense. And it's a solid base that we work day and night to expand on it. I hope this address, where we are and also the direction we're heading.
I think it's enough for the moment more to come.
Yeah, thank you, Mitko, for jumping in and for the detailed answer. As we are hitting 60 minutes already in our call, and I don't see any other questions, nor in the YouTube channel or here, I would suggest we conclude for today. Once again, thank you everyone for joining today's call and for your continued interest in Wiser technology. See you soon.